Hello, everyone, and welcome to Grisch Capital with your hosts, Joachim and Philip. Previously, we were called just Joachim and Philip Invest, but we thought we need a cooler name, and we thought we'd switch the language to English so we can be more, international for at least more European countries and stuff. But of course, we're still Swedish. We're in Sweden, and that's where we build this and do our research. Today, we're gonna take a look first at our new website. It's pretty cool.
Boom.
Grisch Capital, stocks made easy. And basically, our philosophy is that we analyze a bunch of companies, mainly growth companies in the US, and then we see if we think they're a great company. We will put it on our best stocks list, and if they're on our best stocks list, then they're companies that you don't really have to sell or buy for a very long time. I mean, you don't have to trade them, right? It's more for investments. And we're using the Google Translate for translation. So if it's bad, it's because we haven't implemented it properly by ourselves yet. But without further ado, I think we're going to get into our analysis today, which is, let's see here, SoFi Technologies. And if you know anyone that might be interested in hearing about this analysis here, please share the video and like it. So, shall I get into SoFi, Philip? What do you think?
I think we're ready. This is one of the most promising new neobanks coming up. It's definitely made a bit of a run already, the stock, but there seems to be a lot of potential left, right?
Yeah, I mean, it's on our best stock list. We can say that's we give 2 stocks out for free, and SoFi is one of them because it's just so amazing. It's had a bit of a run now, and it was a bit slow actually. Everything else was running without SoFi doing it. Now it's finally doing it, and honestly, I think it could get a lot more crazy because basically the CEO has kind of promised 25+% growth every quarter, year over year, every quarter, 5+ years to go. So obviously, if you do the calculations there, it's going to be a huge, massive company. And what do they add? Like 3 million members a quarter? Is that right? Like, I thought I saw that somewhere.
No, I think, but they were at 800,000, I believe.
800,000 a quarter, yeah.
Last quarter, which made the stock really jump.
Yeah, and I think it was like 3 million a year. That's
it could be,
yeah.
Like.
That's
exactly.
Absolutely nuts. I mean, and one thing that is really, really growing with SoFi right now is their loan platform business. We'll get into it, but that's the most exciting part. I think that's why it's getting a re-rating. So everyone, investors, hedge funds, and banks, basically priced SoFi as a bank, while a lot of retail people thought this is a tech company. I mean, this is a tech company. For example, there's a company called Upstart, and SoFi basically does Upstart's entire business model in just 1 second. And they seem to be doing it more successfully and faster. And what that is, loan platform is basically they just broker loans for other banks, and they get a small fee. So people that are not, I'm oversimplifying it, the people that do not qualify for SoFi's loans, they will just send them to another bank in the back end, and the other bank will take the risk, and SoFi will get a cut out of that. So basically, they're a bank without any banking risk. That's kind of the moat here.
But that being said, they do keep loans on the balance sheet as well, right? So they have that business as well, but it's just for the customers that they do not want to price. They don't want to take the risk on.
Exactly. And their CEO, Anthony Noto, amazing CEO, he has also said that it wouldn't be the craziest thing to move all their loans to the loan platform business, actually. He said that in some earnings calls. So it's a potential which would make them insanely profitable without any of the banking downside risk. Why people don't really like banks and why they perform poorly is because when you have like an economic crisis, they just tank and they take decades to recover. So if you could have a bank without that risk, what's that worth? I think this is on our list because we think, in the short term it can go down, and for a year it can go down, maybe, who knows? But we think in 5 to 10 years plus, if you invest, this is probably, in my opinion, it's a 5 to 10x, and that's insane.
Yeah.
I just think, obviously, you have to be smart with how you invest, but it's on the list for a reason, and it's on the list because you don't need to trade it. You can just buy, and if it goes down, you can buy a little more. For that, that's what I do, for example. Obviously, not financial advice here, but that's what I do. But do you want to take us through the numbers here, Philip?
Yeah, let me take you guys into this. So while we were refining our strategy here and what we want to give to our viewers, we thought that we need a really good looking website, and we need a good way to basically send our message out about what this company is, what it does, and if it's good or not, and how we analyze the company. So that's why we provide these free analysis on our websites of SoFi, and we go through it here on the YouTube video. So I'm going to be going over finances, market potential, insider ownership, and intangible assets. And we believe that these are some of the most important factors to consider when investing in a company and analyzing a company. So over time, we're going to start getting like a rating list based on the finances, market potential, ownership, and intangible assets. But for now, we're going to be softballing, kind of, like just shooting at the hip here with the ratings. But we're going to go through all these today in the video. So I hope you're looking forward to it. So to start off, I think Yuki, you summed it up pretty well, but I just want to read this quote from Anthony Noto, the CEO, who took over in 2018. So he said, "When I joined SoFi in 2018, every fintech company said they wanted to be a one-stop shop. Now, 5.5 years later, only SoFi has done it. Even the industry incumbents still haven't been able to put all of their products on a digital platform and become a one-stop shop." And so he wrote this around 2023, and it's 2025 now, and I think that they've even materialized this even more. So let's go through the finance a little bit, see what's happened in the last few years.
Sounds good.
Yuki, you want to cue the finances here?
Yeah, I forgot it was my screen. Sorry. Here we go. We can click finances, and we got this great floating category bar here where you can just jump around to different sections. Nice and smoothly. But let's start with the finances here.
Perfect. So
what do we have there, Philip?
Here we see huge revenue growth since 2020. So it's moved from being under $1 billion in revenue in 2020 to reaching $3 billion last 12 months trailing. And then the green bar that you see there, that's the growth rate year over year. So they went from exponential growth, really like 50% plus, to now 15%. So this is of course natural, like some moderating growth over time. Also, they want to pace their growth so that they get good users onto the platform that they can securely provide loans to, which is also one of the reasons that growth has been slower.
Yeah. I also think it's actually accelerating. I'm not sure this is quite capturing I think it's re-accelerating the growth. And I think it's re-accelerating because they're more comfortable in growing a bit faster now. They're more comfortable in their products and their data advantage, data moat, how they use the data, how they use a lot of these AI platforms, plug and play, to basically validate people if they should get a loan or not. But this is new stuff, right? So they got to make sure they're doing it properly in case something bad happens. But I think we're actually going to see a re-acceleration 2026. So that's something to mention as well.
Yeah, that's really interesting. So if we continue here, let's look at this that Yuki was talking about with regards to the company segments. So in the blue, we have lending. That's still the biggest part of the business. Then we have financial services. Is this the loan? This is the loan.
That's the loan platform,
right?
business. Yeah.
So this has been growing exponentially, really. And then the technology platform, which is Galileo, if I'm not mistaken, right?
Yeah, but the tech platform is a big disappointment so far. I mean, the only bonus really is that SoFi kind of gets it for free in a way, but not really, because they did buy the company for loads of money.
No, it's not free at all. So I think the performance is, I guess, underwhelming. No, really not a lot of growth there, and it's not really contributing to that. But the core lending business and the financial services platform is really growing quickly.
Yeah.
So this is great to see. What I would like to see with SoFi even more going forward is more diversification of revenues. Something that they could do really well is that they have a platform, a one-stop shop, where they have 10, 20 revenue streams that could be generating 100 million each or more over time.
Yeah.
So I think that the more that SoFi continues to diversify, because this has been one of their theses from the beginning. It's like they want to create a flywheel effect. They get a consumer onto the platform with the student loans, for example, and then the student loan user that now has a loan starts using stocks or crypto to invest, or they start doing other things, savings, and using a credit card with SoFi. And all of these things create a great loop for them to continue just building 100 million, 500 million plus businesses on a standalone basis, which would completely diversify their revenues and also increase their profitability. Can you just imagine the customer acquisition cost then to get one user from loan to something else is almost zero, because they just need they're already on the platform and they just need to click a button, open a new kind of a credit card account or start a stock brokerage account, and then it's done.
Yeah, I mean, I think that's one of the points there. I think we might get into it, but a little bit competition here started in the under end. I mean, you got Robinhood is probably the main competition. And they do the same thing, but they started with trading. Now they want to get into banking. SoFi started with banking. Now they're getting a bit into trading.
Yeah.
I do think brand matters a lot here, actually. And I do think SoFi has the better brand for banking. And I think Robinhood will do great there as well, but I think they'll struggle a bit more.
Okay, so now let's also look at the profitability side, which, in 2020 to 23 was kind of a downside, or, it was a high risk company. When you had operating margins at negative 50%, they're going very negative, several hundred millions negative in operating profit every year. But in 2024 and 25, this is flipped. And this is really promising because now the operating margin here in the last 12 months is 10%, which means that they've been much more disciplined on operating expenses. Their gross margin has still been really high, like exemplary, 82%. So they have a lot of operating leverage built into the business, but they've really, in the past years, they've invested in growth. So this is why why there's been negative margins. It's not weird. This is very common. Now let's just see how much operating leverage they can pull out. I mean, if they keep adding new and new customers like they're doing now, and then converting those to even more products and services at like close to zero customer acquisition costs, long lifetime value of customers, then I think the operating leverage is going to go up even more.
Yeah, I agree, and I mean, I think it's going to be exponential, because now they can just cross-sell, implement new features, new stuff, and they're just going to be able to make so much money. And one thing to note here is that I think I invested in SoFi 2022 or 2021, and honestly, I wasn't that nervous because I've done a lot of research, but the CEO is very credible and very skilled. And if you listen to earnings calls, he's like, yeah, but we're going to have our first GAAP profitable quarter in 2023, and then we're going to be fully profitable from then on, while investing in growth. So I just think that's a bit of a side note, but that's definitely something to look into, because when a company flips from negative to positive, an interesting thing is that loads of, usually companies that run negative, I don't know, cash flow, GAAP profitability when they're not profitable, they will have a lot of downward pressure from like shorting and stuff from other businesses, because of the nature of the business. I think like 95 or 96% of businesses that are unprofitable will fail. Like they won't ever turn profitable. So it's just an odds game for like huge banks. If you're unprofitable, you're shorted, right? And that puts pressure on the stock price downwards. But when you flip to profitability, all these big hedge funds and banks, they'll be like, oh, we were wrong on this one. We're going to be right on the other 9, but we were wrong on this one. So let's cover our short. And they get exponential growth in the short stock price also.
Yeah.
So that's something I really love companies that are unprofitable, just about to turn profitable.
Yeah.
With a credible management team that you can trust.
Yeah, exactly. I completely agree. And, before we move off of finances, I just want to show something. Yeah. No, you can go down to the other one.
Yeah.
The deposits.
I'm clicking around here. Deposits, yeah.
So this is, if you look into it, actually, can you hover over? Yeah. So this is the customer deposits. So right now, SoFi holds around $29 billion in deposits, and this has grown from about 7.5 billion in 2022. And I just want to note that for a bank and for the banking business, deposits are a leading indicator of growth. This is a way to cheaply finance new loans. It's by getting more and more deposits onto the platform. If you're getting more deposits, then you can give out more loans, and it's a cheap source of financing to do so. So this exponential growth also represents that, more and more people are choosing SoFi as their primary bank.
Yeah.
So the more people that choose SoFi as their primary bank, the more their deposits are going to grow, and they have so much more room. You might think 29 billion is a lot, but in the next kind of phase, when we go through market potential, you're going to find out that this is nothing. It's 0.1%, right? I mean, we could look at that real quick, actually. Like if you go to market potential here, first one, kind of market size forecast.
Yeah, let me share your screen, actually. Boom, there you go.
Yeah, perfect. So, I mean, if we look at this now in 2024, household funds 36 trillion, mortgages 2.3 trillion, personal loans 257 billion, student loans 9.55 billion. I mean, just look at these figures. I mean, they started in a smaller market, which is student loans, and I mean, look at the
they had to pivot
potential that they have. It's just crazy.
Yeah. And they had to pivot from student loans, right? Because I think it was the Biden administration, they canceled all the student loan debt temporarily. So basically, SoFi's entire business went to zero overnight, and they had to come up with a plan to pivot.
Yeah.
And I don't even think, not 1 quarter did they have negative growth or anything. They just kept on growing through that huge turbulence. Imagine in just one day, the entire business you built just goes away. And then you have to pivot within like 2 weeks and implement something else. And I think they pivoted to like private loans with good rates and stuff and transparent payments, which they did great. They're great at marketing as well, at deploying these products and scaling them.
Yeah.
But what I also think is that they have the best customers in the world. So the best credit-worthy customers in the world. Yeah. So to get young people all studied at like Harvard, MIT, well, not all obviously, but most of them, they take into consideration, where you live, where you come from, kind of, what background you have. So they just don't use the normal. Is it called FICO score, or what is that called?
Yeah, the FICO.
Yeah. They use the AI to do this stuff, and they couple it probably with traditional methods. So they have the best customers, and these customers also, they're probably from wealthy backgrounds. So they check out, what their parents do for work and what banks they are with. So when these people inherit the wealth, you could probably safely say that loads of these people are going to inherit loads of wealth, like a wealth transfer. And then automatically it's going to go from JP Morgan to SoFi.
Yeah.
Because that's where the inheritance is going. Yeah. So you got loads of catalysts here. Almost naturally, you will have growth all the time.
Yeah, and I think actually exciting. This is a good point, Jukka, because we're in for like the biggest generational wealth shift that's ever happened, And I think that's going to be in the next, 10, 15, 20 years. And this is a good point to bring up, a good time to bring up our philosophy around investing. We hold long term. And when we see trends like this and see that, SoFi is resonating so well with young people that are already in affluent families, have good jobs and so on, then I think that we can ascribe a higher percentage chance that they will move, their inheritance and all the other money that they make in their lifetime onto the SoFi platform. Once you get started with a bank, it's quite sticky.
Yeah, it's quite sticky. And also, like, these people that will inherit this wealth, they hate traditional banks because they saw loads of them saw their parents getting, effed over by the 2008 banking crisis. Right. So they hate, Goldman Sachs. They don't like JP Morgan. They don't like, I don't know, Morgan Stanley or Barclays or whatever they're called. They don't like these banks. Probably loads of them aren't even banks that I mentioned, but you get the drift. They don't like these big corporate old structures. They don't trust them. They don't trust people in, suits and ties and, I don't know, glasses.
Exactly. And this is, and this is the thing as well. Like SoFi and a whole bunch of other, neo banks, they're digital first. Digital first. There's a completely different cost structure there, first of all, and also a completely different set of competencies within the company. So that's super important.
And also, just to circle back quickly about why we hold long term. Specifically, what I like these super volatile stocks. We have an article about it actually, but the price for extreme gains in the stock market is volatility. And the only way to stomach that volatility is if you trust the company and the management team, you think it's a good product, and you have time on your side. You have time. If you can hold it for 5 to 10 years, if it goes down 20% in 2 months, like, who cares? It's still a great company that you believe in the future, and you believe in the management. So, and that's how you make a lot of money. People, they usually like these volatile stocks. They trade them short term and they always lose money. And people who like slow gains, slow rollers, they invest in these super slow growth companies that are very established with low risk, which you could argue that they're not low risk. All companies are high risk. And so you might as well be able to catch extreme upside. You just have to be able to stomach the volatility. But I think if you have time on your side, and if you just, if you sit still i båten, as we say, you're just calm and you trust in the management. Well, you trust in the people who do analysis of these stocks as well to keep you updated.
Yeah.
There you go. I mean, you're gonna do great. So
and if you guys are more, even want to explore this even more, then definitely check out our 5 golden rules on the website, which is kind of our operating principles for investing in the stock market. And you should know that stock analysis coming even more. Best Stocks is for premium members. They get the list of the best stocks that we've handpicked and analyzed over time, and we've been investing since back in for me 10 years. Yuka, you like 7, 8 years, and we have handpicked a really great list here for premium users that also get a exactly, here it is. So and you get a newsletter as well with weekly updates for all of these companies.
So if you want the full list, you have to subscribe, but obviously, and then you get a newsletter with updates, which is good because if one of these volatile stocks goes down a lot, you want to know what's happening here. But these are handpicked not to be traded. These are handpicked to be invested in for a long period of time, and that's what we're doing with them. Obviously, we'll let you know if we think that, okay, now it's getting a bit ridiculous. But I think, and you obviously want to be diversified, so we really recommend subscribing to the list. But obviously, it's not a must. So
if this resonates with you, then we'd love to have you on board. And so, I mean, now, like, if we jump back into SoFi here, then we can see that for personal loans, mortgages, and these different kind of categories here, we see that there's like a 2 to 4% base market growth rate, CAGR, until 2030. So it's just steadily growing market, and then so, when I look at a company's growth potential, I think about two things. How much is the market going to grow, and how much share is this company going to take in that market? So so what I like about this is that, it's a steadily growing market every year. It's not that insane, but we believe that SoFi can take significant share in this market, which they've already done, and I think they will continue to do based on the reasons we mentioned earlier.
Yeah, and the market is already huge, so
yeah,
it's like,
of course.
So
there's
really
a lot
to grow. But,
there's a lot to get. There's a lot to get, and so one thing that we look at a lot is insider ownership. And I like to invest in founder-led businesses, and if it's or at least businesses that have CEOs that have a proven track record and have a lot of incentive to do well and make the best out of this company. And for SoFi, it's it's a little bit of a mixed bag, I would say. Honestly, it's not a founder-led company. So Anthony Noto used to be the CEO for the NFL, right? And he's worked at Twitter as well when it was called Twitter, and now he pivoted to SoFi. But what I like about it is that he has 1.9%, so around 2% of the company worth. When I wrote this, it was worth around $600 million. So I mean, I think if that's not enough incentive, I don't know really what is.
I mean, this guy is not a billionaire yet. So this is a lot of money. He's got a lot of his wealth. And what I like about him is also that when the stock goes down, he buys more. I mean, when the stock went down to $6, he bought for like $200 million or something. Like he bought a lot of SoFi shares. And also, not only has he been the CEO of the NFL, but I think he used to be a vice president or something of Goldman Sachs. So he was very, very, very high up at Goldman.
Yeah.
And obviously, so he's got a lot of expertise. I think he's very operational actually, but I think he's very good at getting out of the way for growth as well. So he doesn't get in the way and be like, oh, we got to do processes. I think he realizes that he's good operationally and stuff, but he lets people do their thing and he likes to get the best people. So it's very exciting. So like his skills from banking, Goldman, right? All the contacts and connections he has there, coupled with the NFL and Twitter. I mean, that just makes like the ultimate CEO for this kind of business. I mean, because you got super expertise in this
financial
domain.
services.
Plus, financial services, and you're great at advertising this. You know what resonates with people. It's sports. You're great at advertising. That's why they have SoFi Arena. Taylor Swift was playing at SoFi Arena for, I don't know, 20 concerts or something. So I just think it's a perfect storm to have him as the CEO of this business.
Yeah, I agree. I mean, I think that one downside to be critical then would be kind of the tech background. I guess, Twitter's got a bit of a bad rap around, especially during that time when he was there, I think, for their technical kind of issues and stuff like that. And also we could see in the tech business, it's not growing that much. So this is something to keep a lookout for, honestly. But we think that the lending business more than outweighs the underperformance in the tech business.
And also, I just want to add, a thing that I love is that he sees the critique about the tech. Because when Robinhood launched banking, coupled with like 10 different products, everyone was basically shitting on SoFi and Anthony Noto. Okay. And obviously it's not nice, but he responded on X saying like, oh, this is blah, 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 blah. I don't know if the response was the most beautiful response we've seen, but you can tell he got pretty butthurt from that. He got pretty angry, right? And that's good. I mean, he should get angry. He should get critiqued for it. Because then he will be like, okay, no. I'm going to prove these people wrong. And all of a sudden, that might actually motivate him even more. So I think he's incentivized and motivated as an individual. Obviously, he's accomplished great things, but I think it's great that he sees the critique all the time. I mean, they got so much critique when Robinhood launched banking. I mean, the stock fell like 20% or something. SoFi stock fell when Robinhood launched banking because everyone was like, what is your product velocity sucks. Like, come on, do something. And I think they've actually started ramping up stuff ever since that thing. So it's great. It's great. I mean, it's good.
Yeah, competition is good, I guess, here. I mean, really.
Yeah.
So this is just a quick kind of breakdown. We have some work to do with the visualizations, but actually the data behind this is super interesting. If you're interested in ownership structure here, so we have the market value of what kind of the institutional managers own, how much the hedge funds own, banks, other investment banks, sovereign wealth funds, pensions, all these types of groups of people. So it's a good mix, a lot of institutional ownership. I think that actually in this, a lot of the I wonder where the kind of public ownership is. I think here we have it, public. So 45%, and then you have institutional 52%. A big retail base, I would say, and that shows in this
people
number.
love this stock. People love this stock. I mean, back in 2021, I think when I invested around like $6, $6, $7, $8, $9, and obviously, I didn't hold it. I didn't
hold. Yeah,
I didn't hold it for all the way up. I actually had to sell because of private reasons. So I had to cut one stock, and I had to cut a bit of that, and then I bought in again at like 15, I think, and then I bought some more at 20. And honestly, I'd be happy to buy some more right now. Honestly, I mean, I wouldn't go like, if I had no investments right now, I wouldn't go all in SoFi right now with all my money, but I would take 20% of what I had to invest, put it into SoFi, and then I see what happens. If it goes down a bit more, oh great, I'll buy some more, because we do think this is a generational company, and that's why it is on our best stock list, along with 8 other stocks. But
yeah, exactly. And also, just to clarify this, actually, so on our website, you'll see the institutional ownership is 52%, and then this is the breakdown within that 52%. What's owning it. So if you want an even more detailed breakdown, here's what we got.
Very granular. Very granular.
Yeah. And so I want to go over now to kind of wrap this up about SoFi. It's the intangible assets. And this section for us is short and sweet, but also just narrowing down the other aspects that are not captured in the financials, the market, kind of the insider dynamics, and the company leadership. And we want to see okay, what unique intangible assets does this company have that will make it continue? And one of those for SoFi, we've touched on it a little bit, is the culture and the leadership. Yuki mentioned Anthony Noto. He seems like an NFL coach of a rock star team, to be honest. The way that he expresses himself, and I feel like he's always just open to learn from his employees and from the people that work for him. So one thing I actually saw that on this website called Comparably, there's anonymous people from the company that go in and put in what they think. And what they say on average kind of is that management is very solution oriented and ambitious, clear values, such as putting the interest of members first. Members are the customers, and they call them members on the platform. And I like this right away, because they call them members. It's not like you're my customer, I will extract all the value I can out of you. That's what customer kind of means. But if you say member, then it's like, how do we give the members the most value possible? I think this is something that Costco has done. Like the Costco playbook is obviously exceptional.
Costco algorithm.
The Costco algorithm. And this is kind of, they also have, Costco members. It's a membership model. And this is really, reminds me a lot about what they do. So, one of the downsides, they said that it's really fast paced and can create a bit of stress. So depending on who you're working for, I mean, who you are, this could be too much, but I think that having a culture that is fast paced is better than having a culture that's slow paced.
Yeah, and I just want to add on that. I think it's very important in a business like this that's actually highlighted, that people actually think it can be a bit stressful, because I think SoFi would be like a prime example. It could have been a prime example of, they hire people, they don't really know what kind of engineers they need, or and people go to work, they write one line of code every other week, and they get paid $100,000 plus benefits a year. That's ridiculous. I mean, you should be stressed working at a company like this. Well, stressed, maybe not stressed, but getting stressed is really on you. Okay. If you're stressed, it means you haven't done what you need to do. That's why people get stressed.
Exactly.
It's like, no, that's why you get stressed. If you're stressed, address why you're getting stressed. And if it's too much work, then that's another thing. But I think it's great to see this on this, like on this company specifically. Obviously, Robinhood, everyone's stressed there. I can guarantee it. But it's great to see on SoFi as well that people are a bit stressed. And I also want to add, just before I let you speak again, Philip, it's that intangible assets is like the most. We haven't highlighted here enough, I think, but that's intangible assets. It's what makes it possible to make hundreds of percent in a stock, thousands of percent. Everyone can look at the numbers. Everyone can look at the growth rates. Anyone can look, like you can give to ChatGPT and you can have no clue, and you can ask it, is this good or bad? And it will tell you, right? But what ChatGPT don't know, and what usually analysts don't know, because they analyze numbers, right? What you need to be able to do is like, is this going to be able to grow in the future? Is this a good product? Do I trust the management team? Like, have they proven in any way that they can pivot if something bad happens? Like, that's why it's so important to look at the intangible assets, like what you can't really touch. Like, what did this guy say in this interview that only has 300 views on YouTube? Did the CEO leave a little gold nugget there? I'm very much for that. Kind of the intangible stuff.
I totally agree. And over time, this is our first video. We want as much feedback as possible from you guys, what you think. But one thing that I'm thinking about is that, this is such an important section, and we could really expand on this even more on the website and give even more insights, over time, and also, the more companies that we do. And if you guys like it, then, just let us know what you like. Let us know what you don't like.
Absolutely. So, and obviously the numbers are important as well. When you look into a company for the first time, you need to know the numbers. I mean, you need to know how much debt do they have. There's no point in buying a stock that has a great culture and there's no way of them surviving the next quarter, right? So you have to look at the numbers. But once you look at the numbers and you're like, oh, it could be good, could be bad, what makes it a good investment or a bad investment are the intangibles. So just want to clarify, numbers also matter, but
completely agree. And to kind of wrap up SoFi, we talked about this as well, but that technology culture, the tech first approach to banking, as well as the acquisitions that they made, even though that they started off on a slow base, could continue giving the company leverage both internally and externally to the customers that they serve. And I mean, for me also, it's just the industry potential. I think, banking is getting reimagined completely. And what does it mean to be banking with a company now is completely different than it was before. It's digital first, it's AI native, it's quick insights, full control over your financials, and understanding, transparency. And I think that's also one of the intangible assets that they have here, is that they are much more transparent than others based on their tech fundamentals, and also just the way that they treat their members. So
they're the first. You could say they're the first user or customer centric bank. I mean, before, banks had like a monopoly on giving out money to people, because it was so hard to start up a bank. But thanks to tech, it's no longer as hard. Obviously, it's difficult, but this is the first customer-centric bank, and that's why they are doing so well. They have a friendly brand, they have transparency, they have customer-first approach. So if they make more money, they will use that money to save their customers more money. And when they do that, they will get more customers and make more money. It's quite simple, but other banks never needed to do that. And now they need to do that. Otherwise, they're not getting any customers, or people are leaving. And the big banks aren't really feeling it yet, because a bank is sticky. It's difficult to switch. But as technology gets better, and as natural attrition rate of how long you live churns, they will start seeing it, and I think we'll start seeing some more upswing in SoFi.
Yeah. I mean, and also, you know, we don't have this in, but I think it's important for our fans on YouTube, give a little bit of extra nugget. I think that we should also just go through, you know, just a few minutes, maybe, our bearish case here, because I think it's important not to sugarcoat anything. You know, every company has its risks, and you want to know what are the bearish cases to understand, like, if the company will succeed or not. If these bearish cases are alleviated, then, you know, it has even more potential. But if not, then where are we at? So do you want to start, UK, about that? Like, just a quick, you know, 1-2 minutes about what are your main bearish cases for this stock?
Well, I will go through them, but I'm a very positive, bullish person in general. You know, I think you can always find bearish points also about a stock, and you can find bullish points. But if you want to make 100 times your money, you have to look at the bullish points. I mean, you just have to put more weight to them, because everything about the bearish points can be true, but will they outweigh the bullish points? That's the real question there. So I think that's also important to point out. But some bearish points would be like the technology platform is terrible. I mean, the Galileo, I mean, it's absolutely terrible. It's had zero growth for 3 years. And Anthony Noto was talking about how it was going to be the Amazon AWS of fintech. I'm not sure if he actually said that. That's kind of what I've heard he said, but I haven't actually seen that, so don't quote me on that. Maybe just people say he said that. But that's been terrible. And that's like, okay, why is it so terrible? And then they say now, they're like, oh yeah, well, we kind of get the technology platform for free because we use it. But it might just be that they're a bit early with this. Like, banks might not be as ready for it. And that's obviously, you know, a bear case, how poorly that's performed. I mean, it's terrible. And thankfully, it's like a very small, like who cares almost. But it was a misstep, a miscalculation, I think. If it doesn't get super much growth in the future, then it's no longer a bear case. And the other bear case is obviously what all banks have. You know, if a huge, massive recession happens and they're not able to, you know, loads of banks go under, and they are a bank. So, but I think that's actually very de-risked now, since they kind of throw off all the bad loans onto other banks. So they're like the middleman of the loans. But that's obviously a risk. And that's my two main concerns. And another concern would be, actually, I think Anthony Noto is a good CEO. And if he were to leave, I don't know a better CEO. I mean, yes, there's lots of good CEOs, but he's a really good CEO. I wouldn't like to see him leave. I think he's a good CEO for this stage and the future stage of the company as well. So that's three bear cases. You got the technology platform's terrible. If Anthony Noto leaves or something happens, so he has to leave. And then the broader economy, right? And even if SoFi doesn't go under, it could tank the stock price for a while, like a while, 5 years plus. You could be minus if you buy now, and we're going to bad recession. But that's always a risk. And then a lot of other companies are going to go bad, except for like Celsius, because they sell, you know, $1 drinks. What do you think, Philip? What do you think of those bear cases?
I think you brought up some really great points there. One thing that I would add, which is a smaller point, but it has to do with the, you know, a little bit about the culture and then one specific type of product. And I mean, I think that it's important that the culture is consistently pushing product velocity. And I know that, you know, integrations and acquisitions are really tough, and they take a long time. And it seems like it's been like that with the tech platform. It's a little bit alarming that, you know, they had to acquire this tech platform to build it. This kind of tells me that they don't maybe actually have the competencies needed completely. But if they're really good acquirers and a really good company culture that moves fast, then you know, that alleviates that risk. And one thing that I would like to touch in on, and this kind of will be a little bit of a little gold nugget hint for the next video, but one thing that they need to look out for, I think, is within their personal loans business, we know that there's a huge shift among young people like us towards buy now, pay later. And, you know, what's going to be the role of, you know, consumption and, you know, giving credit to people? Is it going to be credit cards, or is it going to be BNPL and new, you know, really fun ways to interact with your money? And that's kind of what these BNPL players are doing. And they could take that entire personal kind of loan market by financing with just BNPL. So that's something that I want to know, like, you know, can they pivot if that is the case, and are they thinking about this? Because that could be a huge contributor to their business. That it's either a missed opportunity or just tanks, you know, there's some of their personal loan business. So I think that's something that they need to keep up with. They need to really be able to keep up with the younger generation. I think a lot of BNPL companies are doing that well. For example, Cash App, Venmo, Klarna, and you know, I think that, you know, that's something, I mean, that's Klarna a space that we're really interested in, and we're going to be covering even more in the future.
Yeah, I mean, there's a bunch of companies. I mean, Affirm, Klarna, it's like the two main ones for me. But Klarna is also, saw loads of interviews with their CEO Sebastian there, and he, you know, they are a bank, and they'd like to expand to more products. They're doing the credit card now and stuff. So there is loads of competition, but that also shows that SoFi is on the right, you know, in the right place. And what you said about the technology platform is that they don't even own the technology, as I understand it. That's the AI. They kind of rates people based using AI and other data to give them a loan or not. They don't even own that. They use Pagaya. Pagaya is also a stock that I invested in, but I sold a little too early on that one because I had to, unfortunately. But I mean, Pagaya is up like 500% since I bought it. Oh my God. But
no, exactly. It's all about that.
So like, it's so nuts. But they use Pagaya as an API, basically. That goes into their banking platform, and when they get an application, Pagaya's API will rate them and decide if they should send them to a bank because they're a shitty customer, or if they're gonna take the loan on themselves, basically, right? And they haven't even built that technology, and they bought Galileo. So maybe it's just strategic and smart. It's like, no, we're not going to spend time building this. It already exists. You know, there's an app for that. Let's just buy it. We don't care. Why do we have to build it when we can buy it? Maybe, or there's something else there, like you mentioned.
Yeah, no, that's a great point. I think one quick example before we wrap up is that, for example, one neobank is Cash App, and they're doing a completely different customer segment. They're doing underserved people in the US that have lower incomes, whereas, you know, SoFi is higher income, but they have their own credit, you know, model built in house. They approve all their loans. They do everything on their own, and they don't use FICO scores. Actually, one funny thing is that when they implemented FICO scores into their model, it got worse. So that's what, you know. So that's a core competency in a lending business, in my opinion. And if you can't build that internally, then you could get, you know what I
mean? Nice sensor there. Nice.
Yeah. That was like a in real life sensor. That wasn't even edited.
That's like, so that, I guess, is the concerns, but I think it's just outweighed by everything else that's bullish, right? And so just to wrap up here, we have this page here where we got the best stocks, you know, right? Where you get 2 for free. Right now we have Lemonade and SoFi right here, but we do have our other ones. And obviously, this is not financial advice. This is our analysis of this company, and we're just sharing our knowledge. I think it's important to do because we have a huge opportunity here to, you know, make a lot of money and a lot of wealth, build a lot of wealth, because we are in an AI super cycle. I mean, this is probably going to go on for 5 to 10 more years. I mean, this is unreal. So I do think people definitely should take investing seriously. If it's any time, they should do it now. It's not too late to do it now. Yes, it's been going on for 3-4 years, but I mean, we're still early. I mean, we're very early, and
and
this whole AI mode, it doesn't have to be AI stocks.
No,
it will bring everything up, the whole economy. I mean, economics 101 is like, how do you improve economics, productivity? That's like the number one thing. And we have the most insane thing happening now. I mean, more than the Industrial Revolution even, because this compounds on top of that. It's nuts. Did you want to add anything, Philip? Or
yeah, we welcome you guys to our website. We're continually making it better. This is kind of us, Grisch Capital. We want to make stocks easy and accessible, and we want to share our knowledge to help everyone that's watching us become better investors. So
yeah, because I mean, for me, I mean, we both have had tremendous success, and it's changed our lives, with the success. I mean, I'm going in for the hard sell here, but seriously, if you're not going to listen to us, please just look into it anywhere from anyone, or like from Google, ChatGPT. This is something you need to. I strongly suggest you get into, because it's unbelievable. And we don't have the price here, but the price for this is about, what is it? It's about $10. $10 a month, and you get to see all the stocks. And we will update you once a week, 9 a.m. every Saturday. We'll send out the list regarding our top stocks here, like updates. For example, SoFi went up 5%. It's because of this and this and that, blah, blah, blah. We're doing this. That's what it's going to be. So if you're interested, have a look, subscribe. If you have any input for us, what you think we could do better. Obviously, we're trying to get more used to making these videos and get better at that. Right now, we're not very smooth with it. I'm still having. See, I should have removed this, so we were too. I don't know, but so we're trying our best. And if you have any feedback on the website or our analysis, if you have any stocks you'd like us to cover, we'll happily do it. If you want us to make this more advanced, more in depth, or if you want us to dumb it down, we can also do that. Let us know if it was too advanced or not advanced enough.
And just make sure, grishcapital.com. Go check it out. Check out the website. Scroll through.
You get two free stock picks anyways. So that's great. And all our analysis are free. We only have one at the moment, but the others will come up. But that's free. You don't even have to log in. It's free. Just go and look at it. And get familiar with investing. All right. Thank you, everyone. This has been the first episode officially for grishcapital.com for SoFi. It was fun. Thank you for your contributions here, Philip.
Thank you. It was great talking to you about SoFi.
Yeah.
And
all right.
See you, everyone. Grisch Capital out.
See you, everyone. Take care. Bye-bye.
Bye.
Bye.